By far and away, the biggest loser of my list of stocks that I own is Chewy. If we go ahead and look at Fidelity here, you can see that 20%, well 19.99 to be exact, is how much I'm down on my Chewy shares. I started my position at $79.94 and it's getting to the point now where I'm considering buying another 100 shares of the stock. It is trading at a significant discount from where I originally started my position at. And I remember thinking at myself, wow, $80 is a pretty good starting point to own Chewy. And I gotta be honest, if you watch some of my earlier previous videos about Chewy, I really kind of paid up more than I originally planned for. I was originally targeting the 60s and 70s and I should have waited because I started at 80, but that's because I wanted to own the stock so bad. And one of the main reasons was because of the fantastic business model. And I wanted to just briefly give another bullet point as to why I love this company so much, because if you haven't checked out my previous videos, I've talked about so many different things and dove into this company in depth. And I just wanted to reiterate some of the main bullet points that I'm thinking about and why I'm considering adding on to this position. So if you haven't seen me before, my name's Jordan, I'm a millennial investor. Thanks for tuning into my channel. I'm a growth stock oriented investor, mainly focused on generating options income, including from companies like Chewy, and I anticipate returning at least 1% of capital every single month from the growth stocks that I own. And I'm gonna show you why I'm investing in Chewy and why I'm considering buying more. So I hope you guys appreciate this video, and let's go ahead and get started. Okay, so if we go over here and we take a look at their earnings call, I wanted to highlight something, and I think one of the reasons why I find this company so appealing is the predictable recurring subscription revenue. I've talked about this with some of my other investments, and a perfect one is iRobot. iRobot has recently announced that they're going from a one-time sale business model where they just sell a $500, $1,000 Roomba one time, and that's pretty much it. Or they sell one of their robotic mops, and that's it. But what they're currently working on is an iRobot Select service. Actually, let's go ahead and pull that up. That if you want to look at it yourself, you can take a look at it, by the way. But basically, essentially what this company is doing is transitioning its business from a one-time sale of $500, $750, $1,000 purchase, and instead transitioning it to a consecutive $29 a month recurring revenue stream that the company is going to get from selling its subscription business, which is iRobot Select. Now, a similar thing happens with Chewy. I want to take a look at what this said in the previous earnings call, and it says, quote, second quarter auto ship customer sales increased 30.3% to 1.51 billion, or 37.6% compounded annual growth rate over the last 2 years. Second quarter auto ship customer sales as a percentage of net sales increased 200 basis points to 70.3%. This improvement in auto ship penetration rate reflects maturation of the 2020 customer cohort and auto ship's growing value proposition. At the end of quarter two, there were 20.1 million customers using auto ship. And so if we jump over to hypercharts here, I want to show the annual revenue for Chewy. Looks pretty good, right? We go from, in 2017, we have 2.1 billion, we go to 3.5 billion, 4.8 billion, 7.1, pretty nice. And this shows both revenue streams, both before and after the pandemic. But let's go ahead and look at this beautiful chart, because if you look at the annual, it looks pretty impressive, but if we look at the quarterly chart, that's when things really get interesting. Pulling up the quarterly chart here, let's take off the gross profit and operating income. Look at this incredible quarter over quarter chart. If you look at every single one of these numbers, it is improving and growing every single quarter without a hiccup, not one quarter of it decreasing in revenue, going up every single quarter. From 550 million, 650, 763, 805, 875, 1.08, 1.1, 1.15, 1.23, 1.35, 1.62, 1.7, 1.78, 2.04, 2.13, and then the most recent quarter, 2.15. Every single quarter, Chewy has been able to increase that revenue quarter over quarter over quarter over quarter, year after year after year. Looking at their net income, the losses used to be huge for this company. I remember when they first went public and I was not interested in investing in them. They were still in the early stages and I couldn't really see the big picture for where they were going. And I think they're expanding their offerings more and more, and they're offering a lot more private label brands so they can become more profitable over time. And then obviously as they grow to scale, their auto ship is just becoming massively successful. But looking at their net income, It starts out as negative 86 and then gradually trends down. You see they have a couple quarters with lower and lower, and it starts to thin out. And then we get to the end of 2020 and the beginning of 2021. And for the first time ever, this company is starting to skew out a very, very tiny profit. But I don't think that paints a very good picture in terms of how profitable they are. It's kind of hard to tell from that jagged chart. But if we take a look at the profit margins, let's go ahead and scroll down here. You can see that, let's take these off. Let's go to profit margin. Okay. This is the profit margin going back to Q3 of 2017, negative 15.7%. Then it goes up to 13, to negative 8, to negative 8 again, negative 9, and you can see the gradual uptrend to where we're finally starting to get into the slow negative. Now it's negative 2, negative 1, and then now we're starting to get into the positive profit margins. If you see quarter over quarter, when you see it on an actual trend line, rather than a jagged chart such as the net income numbers, when you look at an actual quarter over quarter trend line, you can see how this is steadily increasing. From a company that originally lost negative 15% profit margin on every single product that they sold, they're finally starting to get to a positive number. And I think we can definitely get to a point where, let's say 5 years from now, in 2026, they're gonna be in a spot where this company is probably doing something like, I don't know, maybe somewhere around 10% profit margins. And if that's the case, if what I'm saying is right, as they continue to expand their product offerings, offer more services to their customers, then if they're able to get 10% profit margins rather than 1 and 2% like they're getting today, then you're gonna look at a company that is dramatically going to increase its profitability. It kind of reminds me of something we've seen from a company that you all know and love. Let's go to all companies and let's search ticker symbol AMZN. Ever heard of this company called Amazon? And it reminds me a lot of this because when you look at Amazon's profit margins, let's go down here. Let's go to profit margins. Do you see the trend here? Now, Amazon was profitable in 2017, but do you see how this number is gradually trending up? If Amazon just stayed at 1%, 2%, 3% profit margins, then it wouldn't be nearly as successful. Because not only has this company continued to grow revenues, here, let's go to the revenue chart and let's look, wow, this chart goes so far back. Let's go to even annual and let's just sort, or here, you know what, we'll look at quarterly. You can see that the quarterly chart continually going up, and it divides it by segment since Amazon's so big. But you can see the gradual trend line, originally going from about 40 billion roughly to today's number of about 113 billion. Now that is a dramatic increase, but not only are they selling more revenue, but over time they're becoming more and more profitable as those profit margins increase. Now the same thing is happening with Chewy. Chewy's expanding their offerings as they offer their new telehealth services, as they offer prescription drugs for pets, and obviously their auto ship starts to really take place. But Chewy, looking at the stock, looking at the companies that I hold, of Chewy being one of the top ones in the list, not only am I down on this company massively, but I'm still extremely confident in this company. I do not care where the stock price is at next month, next week, unless the only way I'm selling out of Chewy is if I lose my position due to options forcing me to sell, or if it just goes up to a dramatically, ridiculously high price. I bought my shares at 80. I would not be interested in selling at 90. I would not be interested in selling at 100. Probably somewhere up in the mid hundreds range is where I'd really be like, okay, get me out of this. That's where I want to sell out. Because I think right now, people are not valuing this stock with the respect that it deserves. I think right now, while it does trade at a high PE ratio, it trades at a relatively low price to sales when considering the growth that it has moving forward. Because if you look at the predicted revenue growth for Chewy, at 2021, well, it says 2022, but that's actually the fiscal year. So in the year, the calendar year of 2021, they're going to finish out the year projected at 26% revenue growth this year. They're going to predict that they're going to grow a 20.3% revenue growth rate in the next following year, the fiscal year 2023, calendar year 2022. So 26% this year, roughly 20% next year, and profitability is starting to ramp up. They're going to eke out a small profit of 7 cents this year and 31 cents next year. So that is going to about 4x over the next year, and it is going to start to get to the point where this company is not just going to be a story of revenue growth, it's going to be a story of profitability. In the meantime, if you look at the balance sheet, if you look at the annual chart, and I just want to highlight the cash position of this company because it's really impressive seeing how fast this company is growing its cash position. If we look at the annual revenue, or excuse me, the annual cash position that this company has, in 2018 at the beginning of the year, they had 68 million. The next year, they had 88 million. The next year, 212. And then at the end of 2021, or the beginning of 2021, 563 million. And even looking at that over a quarter basis, at the middle of 2022, 153 million, 500 million, 563, 637, and as of the recent quarter, about $725 million in cash on the balance sheet. So this is a company that not only is growing very quickly, but they're finally starting to eke out profits, and over the next year, it is going to start becoming dramatic. But this company has so much cash and zero debt. They have zero long-term debt. They do have some short-term obligations, but zero in long-term debt. They're cash loaded to the sky. They're growing like crazy, expanding their offerings, and I think it's just a company that I'm really proud of. And so while a traditional investor might look at their investment being down 20% in just the last month or two and get really discouraged on their investment, I think that in 2022, 2023, I think that Chewy's gonna come back in a big way. If you don't believe me, that's fine. Feel free to make your own decision. It's not financial advice. Do not follow me blindly. Consider an investment advisor or do your own research for your own investments. But me personally, I put my money where my mouth is. You will see me invested all of 2021 for Chewy stock and likely all or most of 2022, if not even going into 2023. We'll see depending on how the investment goes. But to me, in my opinion, if I were to bet, I mean, I essentially am betting, but if I were to bet that Chewy is higher than $80 next year, I would think that those are very, very likely odds. And so if this company drops to say $60 a share or lower, you guys know that I buy in multiples of 100 shares, so it's hard for me to commit that much capital when I'm so low on cash. But if it drops to 60 or lower, I'll probably double down on my position, buy another 100 shares, and it will likely become my largest position in the portfolio. But I hope you guys enjoyed this video. Hope you found it helpful. Check out any links down below, including M1 Finance, Robinhood, Webull, credit card referrals, all that junk. But thank you guys for watching, and I'll catch you guys in the next one.